Now, the US dollar has dominated global markets for many years. Investors' nervousness over the US market will have far-reaching consequences both at home and abroad. In 2025, the dollar marked its worst start to a year in over 5 decades. The last time the dollar began a year with such a steep decline was in 1973, when foreign currencies stopped being linked to the dollar. That move came 2 years after President Nixon made a decision to no longer link gold to the dollar. A big part of the reason the dollar has been the world's reserve currency is because US economic policy has been predictable, has been process-oriented, and has been rules-based. Now, all three of those are all sort of up in the air, and so it is clear that global reserve managers have an incentive to diversify away from dollar as US President Trump ramps up his tariff rhetoric as well. For what it's worth at the moment, the US administration might welcome that, as that would help fulfill the administration's objectives of reducing the US dollar's trade deficit. One of the clear indications of reserve flows reallocate is that the interest rates are likely to be higher, not just in US but globally too. A weaker dollar would likely push inflation somewhat higher. If not the dollar, then what? The challenge, of course, is that it's still not clear what the alternative asset to the dollar is. There isn't another currency that serves the same role in the global economy. Most other currencies are not as freely traded or are not as liquid. But the economies on which they are based are not as large, what makes it a tad bit difficult for a dramatic reallocation of foreign reserves exchange. That said, we are seeing changes. The changes in policy are providing enough of an incentive to force reserve managers to look elsewhere.